And good evening. This is the Elliott Wave update for the NASDAQ 100 and the S&P 500 for Monday, March the 18th, 2024. I'm going to start here with the NASDAQ, and I'm going to begin on the 4-hour chart. Basically, what I'm going to talk about is that there aren't any real changes to be making. The markets remain what I would term as really very difficult to apply in terms of direction, why, what's going on, how does it fit in to the larger scheme. So I had to take a step back, and I'm looking at the 4-hour chart, where I believe we remain within a minor fifth wave up here in the NASDAQ. And within it, I'm only comfortable labeling as complete minute waves 1 and 2. Now, the bias of this move continues to hold within the boundaries, as you can see, for a diagonal, and continues to have a basic upward bias. So bringing it down, or just opening it up here, what it kind of is like, you get 1, 2, and now we have this third wave. And is wave 3 done here? And this is all a wave 4. Possible. But then wave 4 is very large, actually goes up and makes a slight new high. This actually can count either way as an ABC or a 1, 2, 3, 4, 5. It's not clean. A lot of what happened here is not clean. A lot of what happens in here is not clean. Today, we saw that the market on Friday came down and pushed overnight. So then again, on the opening, we raced down. We did not hit new lows. I mean, we hit new lows in the sequence, but not broke below this low, and we stayed within the boundaries. So I initially had determined that that likely was wave 4 and had allowed for wave 3 to be put here. And that still might be the case, as we have an ABC, A of 3, B of 3, C of 3. But again, this can either be a 3 up, which would then, start to really make it a little bit more nuanced. But it also can be that we have A of 3, A, B, C, B of 3, and now we're going to do a C wave up to complete. So it'll be 5 waves to complete the third wave of minute degree. And that actually just keeps this whole process going for a while longer. And part of what we witnessed today, I mean, Friday, we have, this is going to not be necessarily talking Elliott, but I got to bring this in because of how the market is trading and how that affects the movement that we're trying to count. We had a whole, if you have any idea about options trading, I've discussed many times now how the real conversation is, it's like, what's the underlying and what is the derivative? I'm an ex-market maker, options market maker. Derivatives were the options. The underlying was the stock that the options were based on. So, for example, Apple was the underlying. The derivative were the options in Apple. Suddenly, with the introduction of zero DTE, with the introduction of all of the volatility products and everything that's kind of starting to take place, and ETFs now coming into play, and within those ETFs, many of them, like the spiders, the Qs, the TQs, the SQs, Diamond, just on and on and on, and in all of the variations of these ETFs, we have ultra longs, ultra shorts, etc. They have now taken over. Are they the derivatives? And so, or are they the underlying? And are the options the real underlying and all of of these other products are the derivatives. So things are kind of getting skewed in how we want to look at it. So we had this gamma, not necessarily gamma collapse, but they put a gamma move on Friday. And really it hit NVIDIA, AMD, and some of the other larger Mag 7 stocks, and particularly also Tesla. Then, so that by expiration, it actually released a great deal of gamma from positions. And then as we came in today, when we walked in and logged in for the opening today, the NASDAQ was up over 200 to begin our session, all happening overnight. And often, or not often, but most of it was within NVIDIA and Supermicrocomputer, SMCI. Both going crazy, both going up. AMD deciding to join the party. Apple going up. Apple trading above 175. I mean, just like go for it, go for it, go for it. So essentially what I deemed what I was seeing was a reissuance of the dispersion trade, which is nothing more than selling volatility via the VIX and buying the underlying, and again, trying to determine which one it is, the underlying volatility. So in other words, the volatility in Apple, the volatility in Microsoft, the volatility in NVIDIA, like all of those different stocks that they're buying the volatility via the options. And so it just kind of produces another situation. It's like, so what are we doing? We're building all of this back up now for this Friday. Then on top of that, literally the hype that I was reading about NVIDIA's keynote conference happening in New York City right now, where they are carrying that live on YouTube. And the CEO is just like talking about all this stuff. And I kind of went into it. It's like, hey, if you're into that, if you're a computer, if you do programming, if you do coding, they're talking your language. To me, it's like they were talking some other language that I don't understand. But at the same time, NVIDIA this morning traded up to 924, then proceeded to get crushed. And I believe the low in NVIDIA today was, I'll tell you real quick, 870. Opened at 903, so it had already really gone up. Went up to 924, low of 870. Now trading back 868 bid, offered at 868, almost 69. So now they're walking it down again. So we keep seeing the volatility get crushed. And when I talk about that, folks, it's like, we just look here. This afternoon, or even earlier today, was up over 100. That's the volatility. That translates into premium in the options. So this all is really in play. Check this one out. Opens at 1107, high of 1147, low of 952. Closes back at 1,000. 132, almost 132.5% volatility in the options that expire on Friday. So, and what I'm talking about here, the 1100 call, look at what traded today. 12,000, because that's where it opened, right? And then traded up, is offered at $21 with it being $100 out of the money right now. But because of the ranges, the volatility is sky high. So the trading is big. And as an option trader, wow, you got to be there. You want to play it. You're going to trade it, and you don't really care. Everything else is off the board because what's really trading is just premium. And it's really good. Lots of money. So back in the NASDAQ, Now, super microcomputer is not in the NASDAQ 100. It is in the composite, but it's just been added to the S&P. So guess what else now becomes more volatile? The spiders, the ES, the SPX, etc. So that we do have to deal with. Now, if you're a volatility trader, you're in heaven for the most part. As a futures trader here in the NASDAQ, I've had to reduce it on 4-hour chart, forget. Hour chart, forget. 15-minute chart, forget. I'm down to a 2-minute. I look at the 5 and I look at the 15, but I'm actually trading off of a 2-minute chart. And it is possible, and I'm catching some good moves, making the goal. And if you follow me here on YouTube, you notice that I've talked about that. I have a daily goal for those that are choosing to join the trade room, that I have a daily goal of at least making the price of the trade room. The trade room currently is priced at $2.99 a month. And so I have successfully now made at least $300, usually within the first hour, hour and a half. And from there, it's like I'm making that goal. So it's not difficult to actually jump in, get your money, and be done. And Elliott is present on a 1 or a 2-minute chart or a 5-minute chart. But I also then, just so that you know, I work with an order volume profile, and that gives me points of control, value high and low. I also work with, and you see them right on here. I have it on all of my charts, a 4, an 8, a 20, a 50, and a 200 exponential. Now I move back to the exponential moving averages. And those are effective and usable all the way down. And then I do have fibs. And even down on a 5-minute or lower chart, you can throw up fibs, and you can continue to add fibs to different levels of a move. And you can refine this down to very tight ranges, which the market tends to do. Now, I say all of this because it is possible to go in and trade this stuff. What becomes more difficult is for me to sit down and tell you on a 4-hour or 1-hour chart, well, this is what it's done. This is what the labeling is. This is what we should expect. Because it is just all threes, the variations of 3-wave patterns. So, bottom line, it is remaining indicative that we are in a triangle pattern in a 5th wave position. In fact, we're in the minor 5th wave. I keep feeling that, okay, we might be in the minute 5th wave, but the market keeps tossing out all of these different little bumps. So I'm leaving it sort of the way it is right now to give the benefit of the doubt that we might go up again, staying within these boundaries, come rising up. I can put a 3, we come back down a 4, we go back up in a 5, and it actually does take this thing to the end of this week or the end of the month before we get a little bit of a turn in the cycles, which I think is going to happen before the end of the month, and then we come nosediving again. And the next cycle will actually, the trough and the cycle would bottom at the end of April into May. So I think we still have one rise up or several now. And to be honest with you, I thought, wow, great, we're on the way right now. Look at them come in, they're coming up to NVIDIA. Look at what they're doing. Boom, they stopped it, they slammed it, and down it went. Then they bring it back up. So it's confusing, but here is the story really has not changed. That I continue to look for the market to move higher to finish this whole pattern. As long as it stays between the boundaries, the trend lines, it can stay in place. When it starts to break below a trend line, and then again below the lower levels that it's reached, and then ultimately, if it were to break below 17,467, then I really must consider and strongly urge that we consider that it's all done. Now, I think the market itself is going to make it very clear when that should, if and when that occurs. So right now, I'm going to leave it open that I'm going to give you both sides of what I think really can be going on here. This could be 1, 2, ABC 3, ABC 4 with a slight irregular. And I mean slight, folks. This high is 18,682, and this high is 18,618. So yeah, it's 70 points additional upside. So it's an irregular. So if I would either that or it's ABC A of 3, B of 3 down here, C of 3 with the 3 right there. ABC 4, and we're now going to move up in that fifth wave. That remains possible. I'm labeling it a little bit differently because in the S&P, it kind of looks more like this than the 3's done. So, and because it is the same stocks that are producing this chop and these moves in the S&P and in the NASDAQ. So, doing the best we can. So this could be 3, this could be 4, and we're heading up in the 5. Now, right now, I have it so that if we came back, let me take this all the way down now to the 15-minute chart. We're just looking at this. That was a great rally. This was all overnight. And then we come in, still going in, and right there, we open. And we run up, and they slam it, and then we run it all the way back up. So what could it be? 1, 2, 1, 2. I'm going to say 3, 4. 1, 2, 3, 4, 5. I put a 3 up here. All right, 1, 2, 1, 2, 3, 4. Yeah, it's see how difficult it can be. But I did it before, broke it all down to where it was 1, 2, 1, 2, 3, 4, 1, 2, 3, 4, 5 of 3, 4, 5 of 3. So again, this did not break that high. So, or actually it has to break a lot more different highs. It's got to really come out here and break this high. So what could it be? Wave 1. And now we're going to come off in a wave 2. So which is what this is here for. So this is one of wave C, one of wave A. So, there's a lot of possibilities, but I do believe we are still going to be heading up. That's my message. And so as far as I can really count, I'm leaving it up to counting what's internally happening. So again, opening this up, if it truly is wave 1, right? So we got a 1, a 2. Actually, we could put it all the way up to here, a 3, a 4, and a 5. Then it could be wave 1. And then this is A, B, 1, 2, 3, 4. We come down one more time. Maybe we should break below 18,209, which was the low this afternoon. And then come back down all the way to here. So a wave 2, 50 to 62%. 62% is right here, 18,172. And then we rally again. So we should rally, that was the 5. If we come down in 3, we rally back up in 5. And then we have another ABC. Now, once I can get that low, I can run some fibs from there, here to there, and see where it projects out to. So I continue to look for it to break towards this level, get above there, break there, and I continue to have things up above. What I need to add, what I thought I could add, is more for wave 3. Now, let me just show you. If I put the 3 there and the 4 here, then I've got to move this out and oh boy, see, it's because we've taken so much time. I got to come in at it this way. And if I start putting this in and come up here, I go to there, and I bring it all the way down to there. So you can see that would be a 4, but again, because it's a triangle, wave 4 overlaps wave 1. A great deal. But here are our numbers. Now, remember, I will take these off so as not to confuse. Here's the 618, but we're not looking for that. We're looking for 18,906. But in the way, we have the upper trend line. So if it goes up there, it should fail. So in other words, it fails, right? And then it would just come falling down off of that pretty severely. Similar to here, but on a much bigger scale. But that would be where wave 5, if I'm considering this, 3, 4, 5 would be equal to wave 1 at 18,906. 618 wouldn't be good enough. Anything in between up here would serve the purpose if we got 1, 2, 3, 4, 5, or ABC, which also should be in the form of a zigzag. And we get the zigzag going up, and it only gets to here, it equals it. Great. And then if it collapses, well, even better, then we know we're getting some confirmation it's over. I'm leaning this way, and I'm going to show you why. I'm going to go over and look at the S&P. So in the S&P, we're inside of minute wave 5. In the NASDAQ, we are not. In the NASDAQ, we are still in minor 5. So I'm trying to kind of just work it that it may just work better to, again, put my 3 there, ABC, put my 4 here, and look for this 5 and watch that happen. So let me just do it that way, because I really do want to try to keep this as clean as I can. And I need to edit that. And I'm going to put 3. And I'll change the colors on the other stuff later. And we'll have ABC, and I'm going to change this to a 4. Because I told you before I came on, I kind of was, yeah, and I know you're all going to tell me I'm waffling around and don't know what I'm talking about, but it's like I challenge anybody to kind of come in and give me theirs and to make it clean and not have to change it. So even if we do it this way, then this is the 4, and we're looking for that, and this could be 1, or we're looking for A, B, C, but this could be 1 of A, 2 of A, 3 of A, 4 of A, 5 of A wave, come back down into B wave, go back up into C wave, and be done. So, or it's 1, 2, 3. This is a 4. We go up into 5, put an A on it, comes down in ABC, goes up, and we're done. So either way, and now we have fibs. Kind of go along. Now, if I bring this back out to the 4-hour chart, we have fibs, and they're all sitting above 19,000. Like minor wave 5 would be 1.618 times the length of minor wave 1, and that's at 19,460. Then I have the C wave coming in at 19,762. These are all, higher fibs. So this could finish up via the triangle. and not make it up to here. But if we get a blow off, right now we're looking, it's going to come in a little bit shy, but hey, it's still pretty high. So that's the NASDAQ, confusing as it is. But I am still looking for additional upside. But you got to learn how to play it on both sides. Over here in the S&P, boy, I know this is making it much longer than I wanted to make these updates tonight. Sorry. So again, we're inside the 5. So minuet 1, 2, and now ABC for minuet wave 3. So how this has got to run is that minuet wave 5 in the NASDAQ is going to contain all of what's left here, right? Or we're coming up in minuet wave 3, we're going to come down in a 4, and we still have that 5 because that would fit better with what this guy's got left to do. Being that this could be minuet wave 1, minuet wave 2, A, B, C. So we get above here, get up to, 52.50. What is that high? 52, I think it was, 56. Get above that high, maybe even as high as 52.98. We stick a 3 up there, we come down in a 4, we come back up. This one still is clean to get itself back up to 5,300 or slightly above. So to be determined. So I am expecting both. The S&P now did not get as squirrely. I mean, it sort of did, but did not get as squirrely. Still had look at that, and it actually did later in the day. Slam, right? So it was ABC. So whatever this was, down. ABC up, another 5 down. So it's a 535. So now I'm going to bring it back out. So what is that? 1, 2, 3, 4. And then we come up in a 5, and that's wave A. Or is it the wave C, and that completes that minuet wave 3? I think that is going to be it. Yes, come on. Thank you. Minuet wave 3. Up into here. At least above 52.56. Then we'll put a C wave up there, and we'll call it minuet wave 3. Look for 4, then still get a 5. So we got more to do. But at the rate that they want to do it, it can maybe take this week and maybe next. Big day, of course, is Wednesday. And that's wreaking havoc on and off because there's, of course, now less of a chance the Fed will cut before June. And so everything gets left unchanged. But again, it will depend on, as I said in the podcast, it will depend on what Powell's press conference reveals. Does he have any change, tonal change, just word change, and starts being more hawkish? So a lot to go on. Both the S&P and the NASDAQ are going to do, they're really going to move, they're going to move in both directions, folks. But both are doing it with an upward bias. And I'm continuing to look at this as a minute wave 5 diagonal triangle up, and I should be putting in some boundaries, but I got to wait for the 3, and I got to wait for the 4 so that we can put these together. But that's where I'm going to finish it up. I'm sorry for kind of just rambling on, but I wanted to fill in some of the blanks as to why and what's causing this type of a move, but yet it still holds within some strange but wild parameters that it's a finishing move, and it's finishing a primary B wave counter trend rally. All right, our next update will be on Tuesday, the 19th.